Hey everyone, and thanks for jumping back into the cryptoverse. Today we're going to talk about Bitcoin. It's quite volatile today. It's down 5% or so. So if you guys like the content, please subscribe to the channel, give the video a thumbs up, and also please check out the Telegram channel, which you can find a link to in the description below. So it looks like for the time being, we got this secondary step, right, has pushed us back down to the 20-week moving average. And what you can see here, right, is we actually had a wick essentially right back down to the 20-week. If we zoom in here, we can see the price of Bitcoin. This is on Coinbase, by the way. The price of Bitcoin went down to 10,180 at its local low. And then the 20-week is currently at around 10,150. So yet again, we see a test of the 20-week, right? So we had a test here, right in this region here. We had another one here. And now we're having our third test right in this region. So this is why, this is one of the reasons why we say when Bitcoin is close to the 20-week moving average, it is really risky for altcoins, right? We know this is really risky for altcoins. And it's because of that proximity to the 20-week that, and as we said in some recent videos, that like an 8% drop, a 10% drop on a single day is always on the cards for Bitcoin, right? It's always on the cards. The fact that we were at 11K, seeing us only drop down a few percentage points and we're already back down flirting with the 20-week, what has happened? Well, exactly what we said in terms of altcoins, right? They're going to continue to bleed against Bitcoin. So what happens, right, is every time that it tests the 20-week moving average, maybe the first time your altcoin, it goes down a little bit, Bitcoin recovers, and maybe your coin recovers some, like whatever altcoin it is, but ultimately speaking, when Bitcoin tests the 20-week again, then the coin is now, the altcoin has reached a newer low, a newer local low, for most of them. Obviously, there's always exceptions to the rule, but for the most part, these altcoins will go lower each time. So imagine this scenario repeats again, right? Imagine Bitcoin were to go back up to 11K next week, and then the following week it were to go back to the 20-week. Well, then a lot of these coins are probably going to continue to dip further and further against USD and Bitcoin until Bitcoin shows us, right, that the 20-week is going to hold, and then we move further away from it. So far, we've only moved approximately 10% away from it. After this drop, that we had on the week of the 31st of August, we've only been approximately 10% above the 20-week, and we're still continuing to flirt with it. So again, I know a lot of people like to day trade and whatnot, but a lot of it is just being patient, right? And just seeing what Bitcoin does. Seeing if it can hold the 20-week, if it can regain that confidence, right? If Bitcoin can gain that confidence back and start moving sideways for a while at a bullish level, right? Then this would give confidence to other coins, like other altcoins. So what that means, right, is it could have meant moving sideways. Let me go ahead and switch it back to a daily time frame. So we're not looking at the 20-week anymore. This is in fact the 20-day. But what it could mean, of course, right, is if Bitcoin had moved sideways at this level, then altcoins probably would have started to perform well again, right? Because the 20-week, obviously this is not the weekly chart, but the 20-week is somewhere way down here, and we're moving sideways at a slightly bullish level, and therefore it gives altcoins time to move up, right? Altcoins do the best when Bitcoin is slightly bullish, but not moving up or down too quickly. So now, right, we speculated at some point, obviously it's not going to be immediate, but at some point, I think we will go back to the top of this range at some point, and we'll test it. And again, we might get rejected again, right? So 12K is obviously the next stepping stone to a $20,000 Bitcoin. So if we zoom out, I'm going to look to see where we are on our chart, right? And actually, let me switch over to the BLX. So it doesn't show the most recent candle back to the 20-week, but you can imagine it there. This only just shows the closing price, so it shows the price of Bitcoin's 10,926. In reality, it's currently 10,414 when I'm making this video. So, we're still on track, right? We're still on track, completely on track to get to a $20,000 sustainable Bitcoin, right? Probably either the end of 2021 or the beginning of 2022, right? I think this is the Goldilocks region in terms of getting to a sustainable $20,000 Bitcoin. So somewhere roughly speaking, in this region here, is when I think that Bitcoin could get to a sustainable $20,000 Bitcoin. I tend to think that as we've said before, right, we could always go to 20K before that, right, and then get rejected, come back down. But I think that in order for us to get to a sustainable 20K, we need time, right? I think time is on the side of Bitcoin. We can see that, despite the fact that this regression band is fairly old at this point, we're still respecting it quite well. Let me hide some of the moving averages here so you can see it a little bit better. We're still following it quite nicely. It's generally moving up, right? The price is generally moving up. Obviously, there's bubbles in the short term. We come back down. Sometimes we kind of see it go the other way, right, where we go down really quickly. But more or less, we're still trending upward, right? We're still trending upward with the regression line. So the focus, right, as we've said before, is to, at least for me, it's not financial advice, but it's to accumulate as much Bitcoin as possible during the years of 2019, 2020, and 2021, right? These are the goals. And it's a fairly straightforward goal. And then the goal, of course, is to get as much of it for as cheap as possible, right? Because you want your ROI to be as high as possible. Therefore, you want to get it as cheap as possible. We already recognize, right, that Bitcoin is not going to 100K in 2021, right? I mean, we talk about lengthening cycles all the time. We know that it's not going to 20. We think, I guess we can't know anything yet, but we think it's not going to 100K in 2021. And therefore, with that mindset, it gives you the ability to take a step back from the market, recognize that if you're investing in the market, you're not looking for a short 90-day ROI, right? You're not looking for that if you're talking about Bitcoin. What we're talking about with Bitcoin is this 3-year plan, right? Looking out to, say, 2023, when our upper bound regression line will be, above 100K. So ultimately speaking, right, we're talking about something like this, where this is going to continue to go up. And then the price it'll slowly get back to the prior all-time high in a more slower and methodical approach, right? And then once we get to it, then we can go into price discovery mode, where we go back up to the top of the band, right, and continue our lengthening cycles, right? Continuing the lengthening cycle and just respecting the path, right, that Bitcoin has always been on, right? These cycles that continue to lengthen as time goes on. So again, it's all about scooping up the Bitcoin when you can and not getting too attached, right, to the local price, right? When you look back on the year of 2020, you're not going to really care in 2023 what the price was on any specific day. You're just going to wish that you got it for as cheap as possible. So if we look back, right, if we look back at the 20-week, so remember the 20-week is what we want to respect. Okay, this is the key level that Bitcoin really needs to respect, I think, in order for it to stay bullish in the short term. So I still contend that Bitcoin is bullish right now. It might not feel like that to a lot of people. As long as the 20-week holds on the weekly time frame, so weekly candle closes, as long as it holds, we see how quickly things can turn around, right? And you can see over here, just a couple of weeks ago, the price went down to $9,800. And then we almost immediately turned around and we were already back above 11K in about 2 weeks, right? So 2 weeks, you can see how quickly the sentiment changed. And then we go another day, and then we're right back down to the 20-week moving average. So we know that the market sentiment, right, can change on a dime. It can change so quickly. But again, as long as this 20-week moving average holds on the weekly time frame, I still contend that Bitcoin is bullish. And what's going to happen in this scenario where the 20-week holds, let's imagine one of our universes of our multiverse of what could happen in the cryptocurrency asset class, right? One obvious path, right, is the 20-week continues to hold. And if it does continue to hold, right, we know the 20 weeks going to continue to move up. Therefore, as we said before, the price of Bitcoin needs to continue to move up to respect the 20-week. So this wick, the most recent wick, came down to right around the 20-week, right? You can see it almost identically matched up with the 20-week, similar to these wicks over here, but these wicks even went lower than the current one, but also the 20-week moving average was lower. So like the 20-week moving average back over here was 9,800, and then over here it was closer to, it was a 9,900 or so. Today, the 20-week moving average, according to Coinbase, is 10,140, but again, it varies slightly depending on what exchange you use. So wicks below are fine, right? If we see a wick below, even to say 10K or even 9,500, as long as we close back above it and we see that the candle closing above the 20-week moving average, then I think things are still okay. But what you have to be on the lookout for, again, right, is if we continue to go up and then come back down, if we do something like that, then I think every test of that 20-week will make altcoins bleed against Bitcoin, right? Even though the price of Bitcoin, the lows, even if the lows are increasing, right? If this low is, if each low is higher, because we're still testing the 20-week, I think that the altcoin ratios against the 20-week against Bitcoin will continue to go down. Okay, so this is the primary thing that I want to communicate in this video. It's just that during the proximity to the 20-week, you have to be incredibly careful about investing into altcoins. Yes, the potential ROI on altcoins can be quite high, especially if the 20-week holds. But in terms of, say, a risk management approach, if you're FOMOing into altcoins, you have to recognize that every single time that we test it, the 20-week is tested, these altcoins will likely continue to bleed against Bitcoin. And again, if you want access to kind of how I'm approaching the markets, remember to check out my website, intothecryptoverse.com. The prices are going up in 1 week. On September 28th, the prices are going up substantially. So I don't want you to think they're just going to go up 10%. They're going to go up quite substantially. And we at this point, you've had a couple months to get in. So this is kind of like one of the last week of warnings, right? Is the price is going up in 1 week. So if you want access to the premium list, which gives you access to weekly premium reports, weekly videos, okay, weekly premium videos. So you might notice that sometimes I went a couple days without posting public videos. It was because I was focusing on the premium list, right? So it gives you access to these two things. And also you get access to all the prior reports and prior videos as well. In addition to these two, you get access to the risk dashboard, which is what I used to trade. It worked out quite well with Link. We even took profits with Ethereum. According to the moderate risk approach, this worked out really well. And then so when it comes back down and you're looking to say, potentially scoop up some of these coins, instead of being that person that bought at the top when the risk level was through the roof, you were selling at those points, and now you're flushed with cash to then reaccumulate, right? You're not the person that went up and bought Link at $20 to then figure out what the hell are you doing now when it's back down to $8 or $9 or wherever it is today. So this is the key thing. You get access to a dynamic DCA strategy dashboard, which helps you dynamically helps plan your dynamic DCA cells based on what you think the peak of Bitcoin will be or Ethereum. And then also you get access to an alerts channel, a private Telegram alerts channel, and a private Telegram chat room. So if you're looking for like an inclusive community, right, where you can follow the data science, right, rather than more the traditional TA, the data science I think is really helpful for people to look at where the risk levels are against each coin. You get the USD risk level of each coin, and then the Bitcoin and Ethereum risk level of each coin. So like Link USD risk, Link Bitcoin risk, Link Ethereum risk. So you can identify like, okay, well, what does it make the most sense to convert between based on these relative risk levels? Because I can assure you they're not always intuitive. They're not always intuitive. It's one of the hardest things to grasp. Like why would say the risk level of Link against Bitcoin be different than the risk level against Link and Ethereum or something, right? Or ADA and Bitcoin and ADA and Ethereum. Well, it's because they're very complicated, right? The nature of these relationships are complicated. When Ethereum's going up 10x, it's not always meaning that Bitcoin's going up that much, right? And even recently, we saw Ethereum show much higher returns than Bitcoin. We expect this, right? This is why we hold Ethereum. It's because we know the risk is higher, so we're taking on more units of risk to hold it, but it's because we expect the ROI to be higher. So there's no free lunch. If the ROI comes, you paid for it with units of risk, okay? And this is going to continue to be this way throughout the duration of the market cycle, right? If you take the risk, you can reap the reward, but you also have to remember the potential volatility to the downside. Therefore, when any bubble occurs, right, no matter how small the bubble or how large the bubble, you want to take profits because you identify that we don't know where the top is and we don't know where the bottom is. This is the main goal. So if you're looking for it, make sure you check out the premium list at intothecryptoverse.com. Prices are going up in 1 week on September 28th. So the main thing to look out for, right, as we've said, with Bitcoin close to the 20-week, we want to respect these levels, right? It's possible that, as we said, right, it's possible that in one of the universes of our multiverse, that we hold the 20-week, move back up, and then we maybe break back into this region, and then altcoins can become more bullish, right? But as long as Bitcoin is flirting with these levels, you have to be incredibly careful with a lot of altcoins. So this is the key point I want to hammer home. Remember, the 20-week, as far as this video is concerned, it is still held so far. If things change, right? If we go below the 20-week, then things change, right? Things change because if Bitcoin's closing below the 20-week, you can essentially say goodbye to short-term corrections back up, right? If we fall below the 20-week, if we fall back over here, if you go back and look, the last time we fell below the 20-week, we immediately, so this was the 20-week right here, we had a close below it, we immediately dropped to the 200-week moving average, right, with a wick to the 300-week, right? It doesn't show it on here because it's not the BLX. Let's pull up the BLX. So let me delete some of this nonsense that I drew. Okay, and let's zoom in here. So we have the 20-week. Let's put on the 100-week. And then here's the 200-week, and then the 300-week. Okay, so we're going to get rid of the regression band to make it a little bit easier to read. Get rid of this random line. Get rid of this line. Okay, and then we'll get rid of this last line over here because we don't need that. So remember, the last time we've tested the 20-week twice before in this market cycle, right? We failed to hold it here. And we immediately dropped to the 100-week moving average, right? And then it bounced back up, and then it came back down. So in this scenario, with weekly closes below, there's likely not going to be a quick correction or a quick move back up to our prior local top, right? There's not going to be a quick move back to the prior local top. Where we currently are, there still is a chance we have a move over the next few weeks back to 12K. There's still that chance, right? The next time we closed below, right? We had a weekly close below. What happened? We immediately dropped all the way to the 300-week moving average, right? We dropped to the 200-week with a wick to the 300-week. So things change, right? When this happens, you're not going to see a short-term correction back up to the local top. It took a lot longer, right? We came all the way back down, back all the way down here, and then we slowly grinded back to this level. But this took many, many months to get back up here, okay? So in this scenario, where we currently are, if we already know that this wick, we already have a candle that's coming back down, right? This is only showing yesterday's close. It doesn't show today's close because we haven't closed today yet. If we drop below this, right, if we see a weekly close, say in the lower 9,000s or mid 9,000s, low 9,000s, something like that, then there's almost assuredly, not 100%, there's no guarantees, right? There's almost assuredly not going to be a short-term correction back to the local top, right? What would more likely happen is we would drop maybe to the 100-week moving average, which at current prices is 77.65. So this would be, this would obviously be a reasonable drop if we had a weekly close below the 20-week. Okay, and then it doesn't mean that we can't grind back up. I think we would in that scenario. I think we would grind back up. It just means in order to get back to the local top, it's going to take months to get back to, right? And if we look at the macro scale, if something like that were to happen, if we did have another drop, we could still recover and stay on course to get to our sustainable $20,000 Bitcoin in the next maybe 16, 18 months, something like that, somewhere over here. Okay, so it's business as usual. I want you guys to stay focused on what the plan is, this multi-year plan that's going to take us through, I would say, for lengthening cycles, as we've said, I think 2023 plus or minus 6 to 8 months is where that Goldilocks region is going to be for the peak of the next bubble. I still think it's approximately 3 years away. So with that in mind, what happens on a day-to-day basis when you zoom out is somewhat irrelevant, right? What you want to do sometimes is hide the price, and we can also hide some of these moving averages. Let's just show one of them, and just see the trend, right? You see the trend, it moves up, and we want to just continue to follow this trend. Don't worry about these short-term moves. I would say just take advantage of them when you can. Always have dry powder on the sideline to take advantage of moves like this, so that they don't feel like you're kind of missing out, right? There's a risk to not holding Bitcoin. There's also a risk to not having money on the sideline that you can use to scoop up dips when they can occur. And remember, the 20-week moving average is what held as support many times during the last cycle. right? During the last cycle, that 20-week moving average is what we saw hold as support time and time again. And if we show the 20-week, this is what it looks like, right? You can see the 20-week. It is a little bit more finicky than some of the other moving averages just because it's a shorter time frame. But again, this is what it looked like during the last cycle. This is the 20-week. And then it peaked here after this peak, and we came back down. And if we add on the price, if we add the price back on, you can see that this was what was held throughout the duration of that market cycle. And then once we broke it, it was the bad news bears. Okay, so again, today the friendly neighborhood bears have come out to play. They're still friendly. The reason I call them friendly is because, you know, it's not like Bitcoin is dropping 80% right now, right? It's not. We're not at the peak. We're not at the peak of a cycle where we're expecting, you know, an 85% drop in the immediate future or over the next year. We're not expecting an 85% drop or anything. These are not friendly neighborhood bears. These are angry bears, really angry bears. This friendly neighborhood bears, right? Friendly neighborhood bears. As long as we're above the 20-week, I would say these are just friendly neighborhood bears trying to say, okay, we're getting a little overheated. It's time to take a break. Let's cool off a little bit, and then get back into focus and continue grinding up, and then we go back up, and then the friendly neighborhood bears come back out again. So again, the friendly neighborhood bears are going to be there even in a bull market. It's those angry bears that when something like this happens at the peak, when we get back up into this level, this is where you don't want to be around when those bears come out, right? Well, we're going to be those bears. I'm going to be that bear. At that time, you know, at this time when Bitcoin is, I mean, at current prices, if it were to go to the regression band, it would only be at 60K. But we know that we don't expect to be within the bubble regression band until we get closer to, say, 2023, in which case I think it's going to be between 1 to 200K. At this point, I will be an angry bear, right, when we get to this level. So it's all fun and games, right? But when we get to this level, this is when I'm going to become a big bear, and then I'm going to be hoping that we come back down. Okay, it's just about looking at the market structure, trying to identify the times to get in, right? The macro level times to get in down here in the regression band, and this one, and then this one, and then also identifying the times to get out, right? The times that we're up here at these peaks, and recognizing that the party's almost over. So again, check out the premium list into thecryptoverse.com if you guys like the content. You can sign up for the next week and get it discounted, right? If you sign up next week, the prices are going to be substantially higher, so make sure you check it out if you've been waiting on that. Also, please subscribe to the YouTube channel if you guys like the content. Check out the Telegram channel in the description below if you're looking for a community, and we'll wrap it up there. I'll see you guys next time. Bye.